Hi, all. Yes. So, guys, here we are for the review of the cost and management accounting paper. It will be a quick review. And yes, guys, if you have an audit exam day after tomorrow, please get out of this particular video right now. Okay? Please don't waste your time on watching this video, review and all, because you have exam to give. Right? So, I'm giving you 2 seconds. Get out. Yes. And if at all you are waiting for, sir, difficulty level of the paper, average, length of the paper, average. Now get out. Please, don't watch this. If at all, no, sir, I want to relax my mind. I want to watch something for 15 minutes. Go to the ArivuPro channel. Their Karthik sir's 1.5 day strategy is there. Go and watch it. Okay, all good. Bye. Yes. Sir, then if you want us to go out of this, then why you are doing this? I am doing this for that kind of students where they are like, sir, how did paper go? Somehow it went, sir. I am not sure whether to prepare for audit or no. To some extent I have written. We are not sure whether that is correct or no. In MCQ, if I am able to get 14, 16 marks, in descriptive I have written something. If you tell the same way how I have written it, then sir, I might go and study audit. Then this video is for that kind of people. Hardly I might take your 30-35 minutes. Okay. So after watching this, go straight away and start with your audit preparation. Okay. Sir, first question comes, is there any possibility of grace marks? Nothing. No possibility. Yes, sir. Okay, straight away starting, guys. First, they ask the EOQ question, one of the easiest question. That is normal formula we have to use. EOQ square root 2AO divided by C. But here they asked what is C. Sir, they didn't ask for per annum. Now, that could be a grace mark, sir. No. Okay. Generally, they will give sometimes as only carrying cost also. They might not give per annum. Okay. So how to solve this, sir? You have to eliminate this square root. So you have to multiply squaring both the sides. So EOQ square you have to do, that is 400 into 400 is equal to 2 into 8000 into O is how much, sir? O is 25 divided by C. So accordingly C will be around 2.5. First one, the answer is 2.5. Yes. Next. During the year so and so, sir, they are asking you to calculate the standard rate, that is absorption rate. Guys, normal simple formula, standard R minus actual R's into standard rate will give you efficiency variance. When the efficiency will be favorable, sir, when your standard R is more than actual R, so your standard R is more than actual R, that is 1500 R's into standard rate, you don't know. Let's take it as X will give you 15,000, so X is rupees 10. In the case study base scenario, sir, first one they are asking under activity based costing, how much should you allocate to the machine hours to machine hour running hours to produce X. So 64,128. This will be on the basis of machine hour. How much machine hour, sir? See here, to produce 1 unit, we are taking 0.5 hours, 0.7 hours, 0.9 hours. So we'll multiply this with this. We'll get a total hours. We'll get a total hours as 33,400. Now 64,128 divided by 33,400 into 13,500. What is 13,500, sir? Relating to Z. Relating to Z, because they're asking here X will give you 15,360, which is of product X. And next one, total cost of product Z. Total cost of product Z, what everyone will do, sir? Pretty simple, sir. We got 84,905, sir. We marked it as C. Guys, the answer is wrong because they're asking a total cost. What you got, 84,905 is your overhead. So you have to add the direct material cost as well as direct labor cost. Now it is total cost. Yes, I can see the number of viewers getting added. Guys, if you have an audit examination tomorrow, please stop watching Go study audit. If you want to watch the video, go and watch the video of Karthik sir doing helping you guys out with 1.5 day strategy. Yes. So next one, they're asking what is the overhead absorption rate per hour as per traditional absorption costing method. So that is around 29.6. Sir, how did you arrive at 29.6, sir? Like this. See, they are telling in the question that the overheads are allocated on the basis of direct labor hours. So we calculated direct labor hours, which works out to be 7150, and we know the overheads is how much, sir? All this together will be the overhead, that is around 2,11,638. So 2,11,638 divided by 7150, it will give you 29.6. So the answer is 29.6. Next they are asking what is the full cost per unit of Y under traditional costing. See, direct labor you are using around 4 kg per kg 2 rupees, so 8 rupees. Direct labor you are using 0.15 and labor rate is 20 rupees, so 20 rupees into 0.15 per kg will get direct labor, and overhead is nothing but 29.6 into 0.15 will get 4.44. Done. Yes. So next, what is the cost driver rate? So machine setup cost, what is the cost driver, guys? Cost driver is production run. How many production runs are it is? Production runs in total is 175. What is the cost? Cost is 49,000. So 49,000 divided by 175. 49,000 divided by 175 will give you the answer as 280. So this is all about case scenario 1. Next, case scenario 2. One more easy question. Here, if at all anyone watching after your examination, the person who is writing in May, if anyone is watching, if anyone is writing in May, guys, if you are watching here, sir, if anyone could have done a mistake, where they would have done a mistake? They would have done a mistake in calculating total cost of product Z. They would have taken only and only overheads. They would have taken only and only overheads. Done, sir. Next, sir, in next question, that is also easy one, guys. What is the budgeted variable cost? Budgeted variable cost, listen here. You got raw material cost S, Q and R per unit requires 3 kg of Q, which will cost you around 3 rupees, 2 rupees per kg, 6 rupees. 4 kg of R, which will cost you around 12 rupees. So total direct material cost is 18 rupees. Direct labor, guys, labor cost is rupees 50 per hour, and each unit requires 10 minutes of it. That is 50 into 10 by 60 will give you 8.33, and your overhead cost is, variable overhead cost is rupees 10. So total your production overhead cost is 36.33. Variable cost of production is 36.33. Done, sir. What is the budgeted net income, sir? Guys, try to understand what is your selling price. Your selling price per unit, they have given it as rupees 50. What is your variable cost? Variable cost, we calculated it to be 36.33. So what is your contribution? Contribution is 13.66. So how many units? 1 lakh units. So contribution is around 13,66,000, whereas your fixed cost is 325,000. Fixed cost is 325,000. Together it is 10,41,667. Option B. Option B. The total quantity of raw material are to be purchased during the year. Here many will do a mistake. What you will do, guys? Straight away, sir, during the year I have to produce how much, sir? 1 lakh units. So 1 lakh into 3. Gone. Guys, try to understand. You no need to produce 1 lakh units. How much you have to produce, sir? 1 lakh you need to sell. 15,000 you want to keep as closing stock. So during the year you need 1 lakh 15,000 units. But already you got 12,000 finished goods, which means during the year you have to produce just 103,000 kgs. So in that 103,000 kgs, how many kg of raw material is required, sir? 4 kg of R is required. So total during the year to produce you need 103 into 4 plus you are keeping a closing stock as 42,000. So together you need so much, but already you have a opening stock of 36,000. So you are going to produce 4,18,000. Yes. So going to the Q, how much is the total cost of purchase of Q? How many units of Q you have to purchase, sir? You have to purchase around 303 kgs, and per unit it will cost you 2 rupees. So it will cost you on an average 606,000. Yes. Next one, sir, here budgeted output minus standard output into standard rate is the formula to calculate a volume variance. That is how much you thought of recovering, budgeted output, how much you actually recovered, actual output, into recovery rate. Sir, favorable, adverse, sir, we thought it's a favorable, sir. Sorry, thought it's a adverse, sir, because budgeted is 40, sir, actual is 48. Try to understand, guys, fixed cost won't vary, which means if your actual is more than budgeted, which means more recovery, more the recovery, more favorable it is. So it is a favorable 15,600. Recovery rate is 1.95, that is budgeted overhead divided by budgeted output. So difference between actual and budgeted we will do, and that will be our volume variance. Next one, sir. Next one. Here joint cost they have asked, sir. Here, listen here. Whoever studied ICI material theory also, then you would be done it correctly. How, sir? Try to understand. In no ICI material question, net realizable value, they have given it as sales minus profit minus additional cost, or after split of cost. In all the question, whatever they have done, every question answer is sales minus after split of cost. But guys, today in examination, they have given how much is profit also. So your NRV should be computed on the basis of sales minus profit minus after split of cost. After split of cost. So after split of cost, they have given here 6 and 5 per unit, per liter basically. And final prices they have given, selling price. Now what I will do, I will find out how much is my sales. My sales is 120 and 50 to 500. I have to sell it after further split off only. Okay. Minus profit percentage, 25% on cost, which means 20% on sales. Sir, how 20% on sales, sir? Please attend the regular classes for that. How 25 is 20 and all. I'm not going to explain here. So 20% on cost. So minus split off point cost, which is after split off cost, 48 and 30 will get NRV. We are going to divide this in the ratio of this one, that is 4:1, that is 4 by 5. So accordingly they are asking only of product Y. So 60,000 into 4 by 5 will give you around 46 rupees. 6 rupees. Okay, done. Next one, sir. Try to understand, guys. Next one. Actually, we are paying for 48 hours. In that, they are telling per day 15 minutes is a break. 15 minutes is a break. So, how many days, sir? Number of days in a month is, week is around 6 days. 6 days, which works out to be 1.5 hours. So, in 48 hours, if I divide into 3 parts, 1.5 is normal idle time. Actual hours worked is 46, which means additional 1.5 is abnormal idle time. Per hour it is 100 rupees. So how much is the cost of normal and abnormal, sir? 150 and 150. Sir, but you told that cost should be reduced. No, sir, normals. Array, that is treatment of cost. Now this 150 should be added to the normal cost divided by 46.5 effective hours to calculate an effective hourly rate. Here the question is not effective hourly rate. Here their question is just cost of normal idle time, cost of abnormal idle time. This was all about MCQ. And sir, there is no wonder if someone tells, sir, whole 30 marks I might get, because out of all the recent attempts, this is one of the average MCQ paper. I don't tell easy, sir, but my MCQ went bad, sir. Am I the one who should be giving CA exams? Try to understand. This might not be your day. This might not be your subject. Your subject might be audit. Your subject might be FMSM. Don't get demotivated. Boss or madam, go study. Go study. Here you might have gone wrong. No worries. All you need is 40. Go study. Make sure in other two papers you will get minimum 110. Yes? Okay, sir. Done. Descriptive paper if you go, sir. How would you rate a descriptive paper, sir? Descriptive paper also, guys, average. First question itself is a marginal costing question, guys. Here they tried to play a bit trick over here, but it didn't work. Why, sir? Or it might have worked also. I don't know. Listen here. Machine M and N are the alternatives. Machine M and N are the alternatives. Now here what they are trying to tell, machine M, 50,000 units you can produce, fixed cost is 150 and profit you can generate is 225,000. So if at all you produce 50,000, guys, how much contribution you can make, sir? Contribution you can make is 375,000. That is 225,000 profit plus fixed cost. Done. 375,000. And next one they are telling, N also has a equal capacity, which means in N also you can produce 50,000 units, right? And here, where did they play, sir? Where did ICA play? They told fixed cost of machine N is 60,000. Whoever in urgency, they have considered 60,000 as a fixed cost loss. I mean, it's wrong. Why, sir? Because they are telling 60,000 less than that of machine N. So fixed cost is not 60,000. Fixed cost is 150,000 minus 60,000. 90,000. Accordingly, contribution in this scenario is 250,000. Okay. Now, selling price per unit is 100. It seems, guys. Calculate a break even. You know the fixed cost. You know the contribution. You know the sales. You can find out a PV ratio. Accordingly, break even you can calculate. They're asking in value, not in units. Not in units. So the formula is fixed cost divided by PV ratio. Or you can use the table. Yes, sir. Done. Calculate the sales level in units where both machines are equally profitable. Here this is the question of indifference point in terms of profit. Indifference point in terms of profit. That is, under both the machine, profit should be same. What you should do, sir? You have to take sales level as X. You have to take sales level as X. So contribution of that X, whatever the percentage you got, minus fixed cost should be equal to contribution under machine N minus fixed cost. If you solve, you will get a X. That will be your sales level. That will be your sales level. Sir, once MCQ 6th one explain. Explanation can't, but I will tell you the answer. 29.6. Boss, you listen, your total variable cost works out to be 2,11,638. They are telling it is absorbed on the basis of labor hours. So labor hours works out to be 7150. So 211,638 divided by 7150 will give you 29.6. Okay. If at all you are not writing in May, if at all you are writing, you wrote exam today and now you want me to explain that, then guys, yes, see, the cost accounts of a manufacturing concern is given. So here they have told that difference between minimum lead time and maximum lead time is 4. This is one of the ICA question. So working out that, you get to know that average lead time is nothing but minimum lead time plus maximum lead time divided by 2. So they have given average as 7. 7 into 2 is 14. 14 is nothing but minimum lead time plus maximum lead time. So accordingly, when you work out, you will get to know that minimum lead time is 5, maximum lead time is 9. And they have asked 2 cakewalk question, that is maximum consumption per day. Maximum consumption, in which formula you will get, sir? In the formula of ROQ you will get maximum consumption into maximum lead time. You know the ROQ, yes sir. You know the maximum consumption, sorry, maximum lead time, yes sir. Using that find out maximum consumption. And minimum consumption, for this you are going to use a formula of maximum stock level, whereas it is ROL, you know, ROQ, you know, minus minimum into minimum, one minimum you know, minimum lead time you know, minimum stock level you can find out. That is the unknown figure here. Sir, what if we assume profit as same amount and solve the question in question 1A? What profit as same amount? I am not getting you. Whatever it is, you have solved that way. Whatever you solved is correct. Go study audit. Second one, 2A. They're asking a cost sheet. Guys, this cost sheet is nothing but your illustration number 3 of your ICI material. Extraction of that illustration. Okay. What do you mean by that, sir? Here they have given stocks. Raw material purchased were ineligible for ITC, so whole 8 lakh you have to take. Packaging cost will form part of your cost of production. Fee paid to independent directors, there they have taken it as cost of sales. Please consider it as cost of sales. That is admin overhead, not related to production. Production bonus paid to workers, same, there also it's there. That is direct labor. Job charges, direct expense. Salary paid to supervisor, factory overhead. Wages paid to factory workers, direct labor. Production control manager, sir, I have taken it as factory overhead. You should have taken it as admin overhead related to production. So it should form part of your cost of production, not factory overhead or factory cost. Sales scrap generated, so reduce it from the cost of production. While arriving at cost of production, take it as a negative amount. Selling overhead, it is in selling overhead. General manager, admin overhead, which is after your cost of goods sold. Freight inward, please add it to the cost of direct material. Expense paid for a quality control check activity is 430,000. This will form part of your cost of production, that is after your factory cost. Here depreciation, they have asked something where you would have used your brains. This is new adjustment. Here depreciation you should not calculate on 25 or 15, you should calculate on 21, 87, 11, 56, 36 lakhs, and insurance you should calculate here. This two will form part of your factory overhead. Depreciation and insurance of these two will form part of your factory overhead, whereas your office building will form part of your admin overhead. Building will form part of your admin overhead. Sir, you missed the question 2B. This one. This is a batch costing question. See here. We are producing in one batch 2000 units. What they are asking, sir? Contribution per unit. So, contribution per unit. How to calculate contribution per unit, sir? You know how much is the direct material cost, direct labor cost. Together it is 405,000. To produce how many units, sir? Or to in the batch of how many units? 2000. Done. Overhead absorption rate is 120 per machine hour. Sir, in a batch, how many machine hours you are consuming? We don't know. If you go to the next table, they are telling in a month you are taking 3000 hours to produce 10 batches, which means per batch 300 hours. So accordingly, your overhead absorption rate is 120 into 300, 36,000. Together your variable cost is 436,000. Together it is 441,000. 36,000 plus 405,000, 441,000. But guys, there is a scrap realization which is 3% of 2000, which is 60 units into 75. So your cost will works out to be 436,500. 436,500 to produce 1940. So you will get how much is your variable cost. From the sales value, from the selling price. If you reduce a variable cost from 250, if you reduce a variable cost, you will get contribution. And sir, calculate the company's total monthly profit. Try to understand your contribution, how much ever you get contribution, that you multiply it with 10 batches, because see, your sales is how much, sir? 10 batches into 1940 units into 250 selling price. You will get a sales minus variable cost. Variable cost per batch it is 436,500 into 10. You will get some amount plus fixed cost 125,000. You will get a total cost. You will get a total cost. Sales minus total cost. You will get a profit. You will get a monthly profit. 2% on excluding or including GST. What 2% on including, excluding? What you are talking, sir? Which question you are talking about? This freight, freight inward, take it on excluding GST. Take it on excluding GST. If you have taken it as including GST, just write the note and come, assuming that this has been treated as after GST. I mean, total cost of purchase as considered, like that. A skilled worker has assigned a work. The relevant data is given below. Time rate per hour they have given. Time allowed, time taken they have given. So 3 hours is time saved. Worker has given an option to choose either HALSI or Rowan. You have to calculate earnings, which is more beneficial. Pretty simple. Under HALSI, you should take half of 3 hours into rupees 25 bonus. Normal it is 25 into 6. Under Rowan it is 25 into 6 plus time saved, which is 3, divided by time allowed, which was 9, into 6 into this thing, normal. You have to check which is giving you more earnings. You have to go for that. This process costing question, guys, nothing extra. Here only one thing was extra. This 30,000 anyhow, this was there in the illustration number 1 of ICA itself. Distribution of this overheads. Okay, so accordingly you distribute on the direct labor hours basis. Here one thing was there. What is it, sir? Whatever process X sends to process Y, generally we used to think that was the output. That is the inventory or input available for Y to give output. But here try to understand, 700 will go, no? For this again 700 will get added. For that again 700 will get added. It will become 1400. On this you have to calculate a normal loss, abnormal loss. Okay. Other than that, nothing special was there. Okay. So B, here, guys, here the only thing was to calculate how much units we are selling right now, so that we can decide on the other things. So how many units we are selling right now, sir? Let's say we are selling right now X number of units. We are selling X number of units. So what is the sales, sir? Sales will be 800x. Okay. Can I tell sales is nothing but variable cost plus fixed cost plus variable cost, fixed cost plus profit. Now, do you know the variable cost? Yes, sir. 300. So 300x plus fixed cost, do you know? Yes, 16 lakh. Okay. Plus profit, do you know? Yes, 8 lakh. So this cost should be equal to sales. Accordingly, we'll calculate how many sales units. You will get 4,800. Accordingly, we'll adjust over here, and whichever gives you more profit, just go for it. This fourth question is a study material question, direct study material question. It makes a 4 round trip, which means 4 times it travels. 4 into 2 into 25 kilometers is a number of kilometers traveled by a bus in a single day, and it is doing it for a 25 days. It is doing it for a 25 days. With this, you will calculate number of kilometers traveled, and if you multiply 30 passengers on an average into 30, you will get passengers kilometer. You will get passengers kilometers. So accordingly, bus cost company 5 lakh rupees. This they have given for depreciation. 2% per annum is the insurance, but you should divide it by 12 if you are calculating a cost per month. Annual tax is 2000, divide it by 12. Garage rent is 500, take it as it is. Annual repair will be 8000 divided by 12. Bus likely to be last for 5 years, so depreciation will be 1 lakh per annum. 1 lakh divided by 12 will be depreciation, what we should consider. Driver salary 15,000 per month, take it as it is. Conductor 12,000 per month. After everything, add the 10% of takings as a commission to them. Together, not 10% to driver, 10% to conductor, 10%, in that they should share equally. Okay, Stationery would be 800, take it directly. Manager come accountant salary 35, directly take. Petrol and oil will be rupees 1000 per 100 kilometer. Here, by doing this, whatever the kilometer you got, right? So divided by 100 into 1000 you do, you will get this. 15% on takings will be profit. Accordingly, this is direct study mat question. Here they have asked one job work question. Calculate the overhead recovery rate of 2023 based on actual cost. They are asking for 2 marks. Listen here, they are telling production overhead is absorbed on the basis of direct labor hour. Production overhead was 250, direct labor were 5 lakh, so it was around 50%. It was around 50%, whereas your marketing is 152, that is on the basis of your cost of production. So for cost of production, direct material is how much, sir? 1150. Direct material is how much, sir? 1150. That's okay, Sharmila. If it's wrong, that's fine. You will get a stepwise marking. You will get a marks for passenger kilometer. You will get a mark, all these things. Don't worry. Okay, chill. So, 19 lakh is a cost of production. Sir, 1,52,000 you left, sir. Try to understand, they are telling it is on the basis of cost of production. Marketing won't be forming part of cost of production. Only 19 lakh. So it will works out to be 8%. And they are asking for this one. Try to understand. Here there is ambiguity, or you can assume in 2 ways. What is it, sir? Packaging and transport relating to this bulk is included in this 8%. So we are not going to take anything extra, or that is in addition to that 8%. Anything is fine, sir. You just give an assumption and come. According to me, both should be fine. Accordingly, you will get that answer. How much you should charge? 5A standard costing question. Here they have given labor efficiency 106.8. What do you mean by that, sir? It is pretty simple, guys. How much ever actual hours you have taken, that is less than your standard, because you are more efficient. So, sir, whatever standard you should have taken to produce 106, that you are producing it with in 100 hours only. Now you are producing the 17,820 units at the 106, 820 hours at 106. So how much will be your standard? It works out to be something like this. Accordingly, using that you can calculate this. Here journal entries, one of the easy question, integrated they have asked. Yes, so wages paid 20% indirect, that doesn't matter. Payment entry they are asking, wages control account debit to bank account, not CLC, because cost and finance are integrated. Done, sir. Selling and distribution incurred, again SND to bank. Deficiency found in stock, this is there in one of the ICI material question. This particular thing is there in the one of the ICI material question, where they told in star they have put and they told it as normal, and they have charged it to overhead. So same thing, factory overhead to stock ledger control, and under absorption, which means your debit side of factory overhead is more than credit side. Now credit it, debit costing P&L. That's it. Cakewalk. 1 minute thing. Sir, how the define spoiled work and a defective work? Sir, try to understand. Spoiled work means it is spoiled. While producing it spoiled, you can't rectify it. Whereas defective work means you can rectify it after incurring additional cost. Discuss the treatment. Sir, it is cannot be avoided, which means normal. Just add it to cost of production, no problem. Due to the bad workmanship, which you could have avoided, treat it as an abnormal loss and reduce it from the cost of production, charge it to costing P&L. Due to the inspection department's mistake, sir, take it out from the cost of production, charge it to the inspection department. Explain the steps involved in the reconciliation of cost and financial. You have to compare both, and you have to starting point and end point. You have to try to reach the end point using a starting point. You might have written or you might have skipped it, leave. Where the reconciliation could be avoided, sir? Reconciliation could be avoided in case of non-integrated. Okay. Sir, state the cost units for this one, sir. Oil in liters, professional service based on the work you have undertaken, education based on students, brickmaking could be in the batches, engineering could be on the basis of jobs, electricity on the basis of units, hotel or catering based on the number of plates, or orders taken, coal mining tons, brewing, sir, brewing only. So that is liters or barrels, and hospitals, patient days. Explain the method that can be used for controlling selling and distribution. So theory question, and again here, what are the basis for reapportionment? They have given a choice here. Listen, the choice is planning and progress on the basis of direct laborers or direct machiners or laborers, like that, and transportation, number of employees would be great. Personnel department, again number of employees. Fire protection, either on the floor area basis or asset value basis. Powerhouse, as they have told, power house relating to electric lighting, not to run the machine. So don't write HP, write your lighting point. Computers or a floor area. Computer section based on the computer hours. Canteen and welfare, number of employees. Hospital and dispensary, number of employees. Hope your paper went well, guys. So now you can peacefully go and study in audit. Try to understand, guys, however your costing paper went. Don't worry, forget one thing at a time. Now you have to concentrate on audit. If you get 40, if you get 110 in those two, you can clear. So now, sir, I was expecting 80, sir, but I am getting 70. Oh, Devru, don't worry, you can make it possible in the other papers. All you have to do is pass in this paper. I assume all of you have wrote this paper very well. All the best for your audit paper. Okay, one thing at a time. Forget about costing. If you want to take a power nap of 30 minutes and start working again. Chalo, guys. In service costing annual repair, I plan to put last. Forget compute per passenger kilometer. Can I get a step mark? Yes. You will get a step mark. Don't worry, guys. It is based on a step marking. Don't worry. Peace. Chalo. We'll meet you guys again in our convocation. Yes, what we do in ArivuPro. So till then, take care. Bye bye, and all the best for your all other papers. Bye bye.